Do not wait for price dips to buy Bitcoin. The odds are definitely not in your favor. And I've run all of the math for you. So I'm going to walk you through all of the math. So here's the thing. Whenever you're looking at investments with known probabilities, there's something called expected value, the EV. The expected value is the probability of every outcome weighted by the probability of that outcome. So if you're flipping a coin and you win $1 every time it lands on heads, and it takes, $2 to play, I think your EV would be about even, if I'm calculating that right, because you pay $2 to win, and you pay $1 to win, you win half the time, it costs $2 when you do win, something like that, if I said the math right. Anyway, the short take is that is a very calculatable thing. And in investing, you never want to do something if your expected value from one approach is worse than your expected value from another approach. So if you can invest in two different assets and one of them pays off 90% of the time and the other pays off 99% of the time, and it costs you the same amount of money in either one, you're of course going to pick the one that pays off 99% of the time, not 90% of the time. Okay, so knowing all that, what are your probabilities if you wait for a price dip? So I ran all the numbers. I uploaded the entire history of Bitcoin into ChatGPT, and I asked it, starting every morning at the very open price of the market, which is the days always start the night before. So at either 6 o'clock p.m. or 7 o'clock p.m., depending on daylight savings time here in Mississippi, at either 6 o'clock p.m. or 7 o'clock p.m., the day starts, and then it runs until 6 or 7 p.m. the next night. So I asked it, okay, at the opening price every day, if you woke up and you bought Bitcoin, or the night before you bought Bitcoin, whatever, what are the chances at any point that Bitcoin is going to dip below a certain percentage? And I ran that for a bunch of different percentages from 1% up to 50%. Because I thought, a lot of people are thinking, I'll just wait for a dip and then I'll buy it cheaper and I'll be better off. And I knew intuitively that did not make any sense. And I knew statistically that was a bad idea, but I didn't really realize how bad of an idea it is until I ran all the math. So here I am. I've run all the math, and I have all the math for you. So I'm going to walk you through all the math right now for how bad it is to wait for dips as compared to just buying whenever you can with whatever financial resources you have. Okay, we're going to start with the biggest dips first. So a 30% dip. We've only had two 30% dips since in the last 3 years. Since the beginning of 2023, the price has only dipped 30% 2 times. But let's assume you're waiting. On any given day, you wake up and you think the price has to be 30% dipped from the all-time high before I buy it. It's got to be 30% more dipped than whatever the price is that morning. So on any given morning, if you're waiting for a 30% price dip, there's a 2.5 times greater chance you will never get that dip as compared to the probability that you get the dip and benefit from a cheaper Bitcoin price. Okay, if you're waiting for a 20% dip rather than a 30% dip, your odds are 2.8 times worse that the dip will never happen. And again, that accounts for the fact that if the dip does happen, you buy Bitcoin for 30% or 20% less. But again, the probability that it won't happen is so high that it's just not worth the massive trade-off, because literally the odds are 2.5 and 2.8% not in your favor. It actually gets worse the smaller the dips you wait for. If you're waiting for a 10% dip, so any morning or night or time of the day, if you check the price of Bitcoin just out of the blue, and then you see the price and you think, I need the price to be 10% cheaper than the price I just saw before I bought it, your odds are 3 to 1 against Bitcoin ever getting 10% lower than any price you ever see. 3 to 1 against. Again, you're betting with 3 to 1 odds against you, which makes absolutely no sense in the world of investing. Frankly, in the world of anything. It doesn't matter if you're investing or if you're playing poker. If the odds are 3 to 1 in favor of one strategy versus another strategy, you should always do the one that has 3 to 1 better odds. That's just common sense. All right, so it gets even worse if you're waiting for even smaller dips. And the reason the probabilities get worse for smaller dips is because the benefit of getting the dip, if you do get it, is even smaller. So as you wait for smaller and smaller dips, the benefit of getting the dip, if you get it, goes down. So the probability of getting of it ever dipping goes up. Obviously, it's more likely that any asset will dip 1% versus 30%. But obviously, you only get the benefit of a 1% dip if you do buy it. So your odds actually get worse. But anyway, at a 10% dip, the odds are 3-1 against that happening. On a 5% dip, the odds are 3.6-1 against you. And on a 1% dip, the odds are 5.4x against you. Again, which means two people wake up in the morning, one checks the price of Bitcoin and buys Bitcoin right then. The next guy checks the price of Bitcoin first thing in the morning and decides he's going to wait for a 1% dip. There is a 5.4 times more likely chance that the person who bought the Bitcoin will end up better off than the person who decided to wait for a 1% dip. You literally have more than a 500% better odds of ending up in a superior economic position. And the reason for that is if you don't buy the dip, again, you're missing out on 1,000% upside for Bitcoin. Or you're stuck then buying at an even higher price in the future. Which is what happens a lot of times. People are waiting for a 1% or a 5% dip. And then when that dip never comes, the price starts running up 20 or 25%. And then they buy in at a much higher price, which again makes no sense because you're waiting for a 5% dip. And instead you took a 20% penalty instead of getting a 5% dip. And it's really hard to recover from that. I mean, what are you going to do? Wait for another dip and do it all over again? It just makes no sense. So statistically, it makes no sense to pursue that strategy. Now, it gets even worse. Those numbers are the assumption off every given Bitcoin price, which means if the price has already dipped, like right now from the all-time high of $126,000, we're sitting at $105,000. I don't know what that is, 14%, 17%. Whatever, the lowest this dip got when it got into the like 99,000 for like 5 minutes. I think the biggest the dip was like 21%. But again, if you're waiting for a 21% dip, that's from the all-time high. So if you wake up this morning and you want it to dip another 5%, the likelihood it will dip 5% more from where it is today is much, much, much lower, meaning not in your favor, as compared to that it will dip additionally as a result of coming off the all-time high. So if you're not near an all-time high, if you're setting all-time highs every other day, yeah, your probability of dips are a little better than the numbers I'm giving you, that you'll be able to catch a 5% or a 10% price correction. But at a time like this, at 105,000, when the price has been as high as 126, in my opinion, you'd have to be out of your mind to try to wait and get an even bigger dip, because the probabilities are not just 3-1 or 5-1 against you. Right now, I don't know those probabilities off the top of my head, but you'd have to run the probabilities and say, okay, what is the probability that Bitcoin, when it's already off the all-time high by 17%, dips an additional 5 or 10%. And if you ran those numbers with the entire data set of the Bitcoin price history, you'd find out, again, that you just have an abysmally low chance of catching that dip as compared to just buying Bitcoin with whatever money you have. Now, if it dips and you feel good about buying more Bitcoin, great, good for you. If it dips and the dip causes you to want to buy more, which I have done numerous times, but again, I did not sit there with money that I already planned to invest waiting for a dip, because that is a losing proposition. Statistically, you are not going to end up better off, and typically by 3 to 5x, not in your favor. But if the price drops, like it did recently, and someone like me says, you know what, I was comfortable with the amount of Bitcoin I have, but people are being so stupid and the price is so ridiculously low for no reason that I'm going to sell the gold and silver that I bought in 2017 and buy more Bitcoin, well, that's good. If you're buying more because the price dipped and it's leading to your conviction to free up additional capital and buy more Bitcoin, great. That is healthy. That is normal. That is what should happen. But if you've already decided to free up capital to buy additional Bitcoin and it's just sitting there and then you're waiting for a dip, that is where you lose, almost every time, or at least 5-1 odds are against you, because in that situation, the likelihood is that the dip you're waiting for will not happen, or you'll miss it, or you'll freak out and not pull the trigger, even though you promised yourself you would. There's just a million ways to screw that up, which is why I do not recommend it. So do not wait to buy dips. If you have capital availability, I would buy as much Bitcoin as you can as soon as possible, because that is the statistically superior outcome. And waiting around for dips, lots of people have lost huge amounts of money waiting around for dips that never came. And just please, please don't let yourself be one of those.